Uh, Good afternoon, everyone. Uh, Thank you for taking out time on Wednesday afternoon uh, for this session on dematerialization of insurance policies. We'll get into the details of the insurance policies on the topic in a bit, but I'll borrow a few minutes to introduce myself and IAI. I know you can't wait because we have possibly the best speaker on the topic who has been dematerializing insurance policies for some time already now, right? So I'm a my name is Sumit Ramani. I'm a computer science engineer turned actuary, and I also happen to be executive committee member of IIA. IIA, as most of you would know, is a non-profit organization which is trying to create an ecosystem for insurtechs in India, which essentially means bringing together insurtechs, insurers, reinsurers, policymakers, service providers, and insurance professionals in one platform. It was started in August 2020 by Shwetang, Shubhajit, and Prerak. Uh, III was started with a aim to fulfill few objectives. The first one being facilitating partnership between startups and broader insurance industry, such as insurers, reinsurers, service providers, and investors. Second, help Indian insurtech companies to access global markets. Third, connect insurtech startups with industry experts, not just from India, but also from overseas. Fourth, be the independent voice of insurtech ecosystem to engage with policymakers and foster forward-looking policies. Fifth, publish and promote thought leadership. Sixth, promote initiatives which use technology to increase insurance penetration across socioeconomic segments in India in a more equitable manner. For us, the growth has been great. In under 2 years, we have 140 plus members. Amongst various initiatives, we have done events on InsurTech with some of the largest and well-known InsurTech digital and content properties such as InsurTech Connect and the Digital Insurer. We have published 2 annual reports in collaboration with BCG on India InsurTech landscape. These are available on our website and free to download. We have also partnered with organizations like Institute of Actuaries of India, National Insurance Academy, Gift City, and BIMTech. Also, to help our startup members grow globally, we have done more than 10 plus tie-ups with similar global insurtechs like Italian InsurTech Association, InsurTech Australia, Instech London, InsurTech Israel, etc. We also conducted our first annual event in Delhi in April 2022 with more than 200 delegates who registered for IAI event. We also collaborated with IIDI when they did their first event on InsurTech in May, and the entire event was live streamed. As you could understand that we've been doing a lot, and since the way we function, we can't really uh, do everything that we have been doing without sponsors. So it's just the time to also thank and sponsors, Scale Up, our gold sponsors, and eBauTech, our silver sponsors. Moving on to today's session, all of us know that it's now IRDA has now proposed to mandate to dematerialize all the new insurance policies. But what does it really mean? Right? Is it something similar to what happened to stocks in earlier in few years ago, and that completely changed how stocks were traded, or does it mean something else in insurance setting? Would it mean that insurtechs would have now be able to access policyholders' information through an API? Would it mean that policyholders would be able to make changes or make policy service level change, make changes in their make service requests easily? Would it mean that we would be able to see all the policies of the policyholder in one place? We and what really it means for insurance industry and insurtechs, right? I'm sure we have one or the other questions in our mind. To answer these questions and many and demystify dematerialization of insurance policies, we have Vivek Bengani with us, who is the CEO of CAMS Insurance Repository. Vivek is a global corporate executive with 20 years of experience in transformation, sales, distribution. He has he has worked in various markets, including Korea, India, Hong Kong, and Europe. He has also attempted a startup, and through his startup, he learned his entrepreneurship lessons and digital business models. He's also completed senior level management curriculum at University of California, Berkeley, and Indian School of Business. So we know, next 45 minutes of today's time would really be the most interesting session that I would have ever attended, especially given the topic and given how important it is, how important it could be in terms of changing how insurance is uh, sold and run in this business in this country. With that introduction, I would like to pass on the baton to Vivek. Vivek, over to you.
Hi. Anyway, I can get a feedback that this is working, so I can go ahead and get started. I'm assuming that people can see me. Perfect. Thank you so much, guys. On a rainy afternoon here in Chennai, I'm from my office trying to connect with the InsurTech members here. Thank you so much, Sumit. Thank you so much, Shobha, and I think thanks to Prerak. I think the idea to connect and talk to the larger community, I think. Absolutely phenomenal. About 6 months back, while Sumit mentioned that I have a 20 plus years career in financial services, I think my association with the with CAMS Insurance Repository is about 6 months old, and uh, I decided to come on to this side because I really see that there is an opportunity to do to really, in a way, transform the entire industry on how we as an industry go and deliver customer experience, how we can help go ahead and help the insurance penetration happen across India. I think that's the thinking with which I came across. I think it's been very fortunate for me because IRDA on their side, I think our regulator is very progressive. They have taken active, steps in making sure what the chairman of IRDA calls as an UPI moment for insurance. I think he's been evangelizing that particular thought, and we believe that IRs, insurance repositories, will play an important role in how we can progress towards that. And DMAT actually happens to be, one critical building block of doing that. There has been an active conversation on the IIA members group, and I thought that today's discussion will get benefited if we got a common understanding on what is dematerialization means today. What does an electronic insurance account do or mean today? Similarly, what is the role of an IR? So I did put together a very short presentation, but use that presentation practically as a starting ground. I'm here as much to share and as much to learn because we as an insurance repository player on one hand, I think also as an industry participant are trying to understand what are the things that need to be done to accelerate the entire adoption penetration of insurance in this country. I personally, having worked across insurance companies, life insurance in particular, I understand the distribution challenges. I understand the customer services challenges, and I think there is a huge road that we have still got to cover as we move forward on this. So please, I think the chat box allows you to put your questions, queries in there. What I have done in my presentation is effectively the questions which were getting discussed onto the group. I just made sure that I will address them quickly and at first, which will kind of bring us all on a common platform. And then it's a free flow discussion that we'll attempt to do in the second part of our conversation. In the meantime, if anyone has any question, anybody wants to raise a remark or anything, use the chat box. I think we'll be able to have an interactive discussion on that. Let me just try and make sure that I'm able to share my screen. Uh, I'm some quick thumbs up will tell me that my presentation is visible. Yeah. Okay. Perfect. Good. So let's get the basics, very quickly out of this discussion, which will make sure that we are on the same page, and then it helps us, in doing this. I've deliberately put this remark of demat versus digitizing because I think the difference is dematerialization is only it's a very narrow way of looking at what is being attempted in the insurance industry. I'm sure all of you guys would know this, that insurance repository as a concept exists only in India. It's a pure innovation done by the regulator in about 8 years back when they thought about this, and they were trying to address a genuine problem of the industry where customer servicing was actually not something which was at the front and center of the insurers, not just in the life insurance industry but across. And the regulator wanted to make sure that there is a platform from where we actually can go ahead and start addressing that problem in a different manner. So instead of trying to look at the industry purely from a vertical perspective, which is to say, what are the product lines of life, health, and general, actually the regulator attempted to look at the industry in a horizontal way through functions and said distribution is already organized as a separate function, underwriting is there as a separate function, risk management is a separate function. Can we look at actually customer services as a way to segment the processes in the insurance industry and see, can we accelerate the whole phenomena there. So I'm sharing something here on the slide number 1, which is actually the vision behind creating the insurance repository system. My presentation will be in 2 segments. Segment 1 will talk about the product of insurance repository system, which is an EIA, the electronic insurance account, and we will get to understand how that works, which will actually address most of your queries around dematerialization, digitization, and how does it help, and what are the things that we are looking at in there. The second part of the presentation very quickly will talk about how does this benefit the insurers in there, and not just insurers. Actually, it benefits all the stakeholders, and with the regulator, with our chairman having a very progressive vision, I think it is going to become all inclusive as we go forward, from here on. So, largely to create a single point of policyholder servicing needs. Number one, aggregation of data, easy flow of information across the entire insurance ecosystem. Those were the key objectives with which this particular system of insurance repository was envisaged. And you can see that 8 years the progress has not been very much there, for many reasons put together. Things have been slow in making, but in the last 2 years post pandemic, as everybody has seen, digital take off in a very different way. I think this area has also got activated in a far more effective manner. So let's start with the basics first. What is an insurance account? E-insurance account is a single account created with any of the insurance repositories. There are 4 repositories today in the market. It's a unique account, which basically means that per policy holder, you are permitted to have only one e-insurance account. So you have one e-insurance account, and you've got to go ahead and get all your policies into that account. There is an existing system between the insurance companies and the 4 repositories, which actually make sure that there is no duplication. We have a dedupe mechanism facilitated by IRDA. That's a system called iTrex. So the moment an insurance company queries whether there is an existing EIA through the PAN card, as a unique identifier, the system is able to check between all the 4 IRs and revert back to the insurance company if there is an existing EIA. If it is, the policy will go in there. If it is not, whatever the choice the customer has made, it will go to that particular IR to create an insurance account. It comes with no charge to the policyholder or insurer. So neither the insurer pays us anything for creating or opening a EIA, nor does the policyholder has to go and pay anything for opening a EIA. So IRs are creating this vessel, this vehicle of EIA, to make sure that when policies actually come into it, and that's where the entire interaction will start from. Creating an EIA by itself doesn't cost anything either to policyholder or insurer. Number one. Number two, you can create an insurance account whether you own a policy or not. So even before going and buying a insurance policy, you can just go ahead and create an e-insurance account. We will do a normal KYC and we'll give you an e-insurance account number. And I will tell you what is the benefit as we go along of doing that. So I hope everybody gets to understand a very simple thing. It's an e-insurance account, allows the policyholder to consolidate entire insurance holdings in there. It's one per policyholder, which means there is no duplication of account happening here, and there are no charges which come on this facility, whether you go to any of the IRs in the market. There are 4 IRs right now active in this space. How do you open a EIA? Very simple one. Guys, I just want to quickly check. I am on slide number 4 where it says, how can a policyholder open an EIA? Can some of you just give me a thumbs up or something to tell me if it is moving? Are you able to see that? No, slides are not moving. Okay, let me share again. Seen? Not seen? A quick thumbs up. Okay, perfect. Thank you. Thank you so much. This was my first slide. I had gone ahead and explained this. Just to recap very quickly, insurance account, unique account, one per EIA, and no charges for the policyholder or for the insurer. Okay, that's the summary that we spoke about. There are 4 IRs in the market. All 4 of them are offering this particular product in there. Okay. Second point is, how can a policyholder open an EIA? Currently, there are these 4 things that are available. You have a mobile, which is mandatory. There is an email, which is mandatory. Either you have an Aadhaar or a PAN. That is what is used to open an EIA account. There are other OSVs which are right now getting built in there, which will be allowed to open an EIA. But today, you can only open an EIA either through Aadhaar or a PAN. And plus, you have to have your mobile and email in there to be able to do that. You can understand why this has been created in this manner, simply because you want to make sure that the duplication is avoided. And these 2 are the unique identifiers across available today to make sure that there is no 2 accounts with one person. Even though at the initial stages we did have a situation where some of the accounts got created in a duplicate manner, but now it's a smooth flowing system. We have no duplication in there, and we are actually able to make sure that every policyholder has got one account and their entire insurance policies are getting captured in one place. Other OSVs being, as we speak right now, there's already a project going on to actually add driving license, voter ID, passport, and all the other OSVs are going to come into the system. We are expanding the deduplication mechanism, again, working with IRDA to make sure that, this becomes all inclusive and it is not restricted only to these 2 identifiers at the moment. Very easy to open an account. It hardly takes, if you are going through the insurance company route today, at least 2 of the IRs, including CAMS, can offer you an Insta EIA, which means that you can open an EIA account literally in a split second, less than 2 seconds. You can open an EIA account. If you want to come directly to an insurance company, to an insurance repository and open an EIA, again, it hardly takes you literally few seconds to do that, because all of these can be validated very easily and done. So the question number 1, which I have kind of seen in the conversations that were happening on the on the group, the member group, that this is going to in any way hamper the customer journey. It is in any way going to disturb the purchase experience. I just want to make sure that everybody understands it is actually not going to come into the way at all. Number 1. I think number 2, what is important to understand is today the way the entire journey has been defined, EIA actually comes at the end of the customer journey, which means that it gets into the action once the policy is issued. So, what is the EIA? EIA is actually a document which is issued to the customer. It is a document which is issued to the customer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. It is a document which is issued to the insurer. and therefore to that extent it doesn't disturb the onboarding of the customer in any way and form. It can actually be useful even at the start of the journey if you want to use it as a KYC, but it doesn't in any way and form hamper your customer journey in there. In fact, in some ways, it can actually enhance because the policy credits can happen instantaneously. The customer can go log in, check their policies coming in there immediately within at a maximum of 24 hours. So dematerialization or digitization of policy will not come in the way of the customer journey in any way and form, in there. What is the service they can get through a EIA? Once you have credited your policy in there, and crediting a policy is also a very simple exercise. Either you can write to an insurance company and say, here is my EIA and transfer my policies there, or you can write to a IR to where you have opened the account and give the list of policies there. These are my policies, and we can request on behalf to the insurance company and pull the data into our repository account, and you will be able to see all your policies in there. And I'll show you how this happens behind, because there is a whole infrastructure of data formats, common standards, all of that has already been defined to make sure that this happens. Every single service that is listed here at this point in time, whether you are going to go and access it through a mobile app, some IRs are already offering a mobile app. CAMSREP has a mobile app called Policy Genie. You can actually access all your policies in there. EIAs, when we open an EIA account, they already have KYC done through an insurance company before the EIA gets opened, and therefore any other purchase of life insurance, any other purchase of insurance, if you quote an EIA account, the insurer does not have to do a KYC. EIA is taken as a proxy of KYC itself. So in that sense, actually it facilitates the customer journey, because if you have opened the EIA, the insurance ecosystem acknowledges that your KYC is already done. This is not, I would say, this is the closest proxy that we have to a common KYC across insurance industry. It still has some work to be done to make sure that it becomes foolproof. But today, this is the common and the closest proxy that you can get to when it comes to a common KYC or an interoperable, usable KYC across the insurance ecosystem. If you have an EIA, you can actually use that as a sort of passport to buy or service any insurance thing. By the regulation, by the guideline of IRDA, the record which is there in an EIA is considered to be a golden record, and therefore demat policies are actually acceptable for any kind of servicing that you want to do on those policies. So a policyholder does not need to produce a physical document to do this. If they can refer to that policy through the EIA itself, they can quote their EIA account and the insurance company can access that information, and they can go ahead and get the servicing done. And give you one example of it. Think about it. You are in a distressed situation. You are not going to be able to access your physical policy somewhere lying in your home, but you need to access and take a policy loan. You don't need your policy. You actually can go to your IR account, and literally in 25 minutes you can get you can get a policy loan into your bank account. This is something which is possible today. It's something which is live today, and it is something which is being done because insurance companies recognize that the data record which is there, the policies which are sitting here, they are the final and they are the primary records, and they can act upon it in there. IRs have a responsibility to ensure that there is a consolidated annual statement sent out to every policyholder once a year. So every time in the month of April and May, anybody who has an account with any of the IRs, they are going to receive this statement, and they can see entirely what all policies do they hold. We are in the process of actually enriching this statement, so you should be able to see premium paid, premium receipts. You should be able to see bonus, which has been credited to your policies. All of those information are now getting enriched, so the customer doesn't have to go around different insurance companies to access this, and be able to get all of that information in one single annual account. You would notice that I'm probably a little bit biased towards life insurance right now. I'm not talking as much about GI because at the moment IR has been active in the space of life insurance, and we will talk about it. Why? and I'm sure many of you know about it, because KYC was a barrier, because of which a lot of the general insurance policies were not able to get onto the EIA platform. But now with KYC coming in, this is actually going to become much easier. And just if you look at the first point itself, that uh, the simplicity of with which you can manage all of this itself, I think is going to make life simpler for the policyholder in there. Today, IRs actually send out premium renewal notices. They are actually able to, if you go ahead and change your address with one IR on your EIA account, IRs will make sure that all the policies with the insurance companies, all of them get the same information. They can get updated. You don't have to worry about going to different insurance companies. Bank account updates can happen on the same one single account. The service requests can be accepted at a single point in there. Currently, when we go ahead and accept service request, we still have, I would say, it's not a uniform service which is being provided, because some insurance companies have enabled the IRs to accept service requests. Some of them have yet to do that. Therefore, it is not a uniform service request which is available across the insurance space, but it is already growing, and it is a service which is available. I spoke about other services which are coming, which are getting developed in here. We just spoke about a service called, digital policy loans. That is something which is coming up here. So there are more and more use cases which are coming up, and all of this is getting built in here. Uh, for all of these services, there are no charges to the policyholder. The policyholder does not pay for what we call, in the IR language, there is something called as basic services. What are basic services? These are services which were part of the policy purchase itself. If you would have gone to the insurer and you would have gone ahead and done those activities, the insurer would not have charged you for those services, because they were part of the original pricing of the product itself. So if you go and do an address update, if you go and do a renewal, notice request, or if you are going to go and ask of any of these services, the insurance company is not going to charge you anything. So does the IR is not going to charge you anything. So your EIA account for any of these services is actually not going to cost anything to the policyholder. That's one of the things that IRDA has mandated. When you're offering basic services, you cannot charge the policyholder for it. When you go and offer premium services, which are over and above basic services, that is where you can actually look at charging the policyholders. Today, I do not see that any of the IRs have stepped into the premium services category at the moment. We are still building up the entire basic services bouquet. So I don't think there is anything which is coming up here in that category, but you could see in future that those will become services which will be offered. And I think from an InsurTech perspective, I think this opens up a very interesting platform, because you have a large set of policyholders sitting here, and you would have use cases and products that you would want to offer to them. I think they can then, come and use these products and services here in that. I think the last point which I want to make is every EIA comes with something called as authorized representative. This is an individual who, as a policyholder, you can appoint. It is in addition to a nominee. This is almost like a trustee, which, in case of the policyholder's incapacitance, or if he gets deceased, in that sense, this AR can actually make sure that the EIA is operated and all the claims are going to go ahead and get settled. It's completely on the consent of the policyholder. The policyholder has to decide what information has to go to the authorized representative. If they authorize, then information will be passed on. Otherwise, it will only be the first information that you are an AR, and it will stop at that level. So I hope you understand that these are things which are already existing at the moment, and they come to the policyholder at no charge. They are already using these services on the IR platform as we speak. Today, we already have 1.1 crore EIAs in there, and we are adding about 3 to 3.5 lakh EIAs every month. This is how this particular, so there's about 30 to 40% growth which is happening on the EIA base in there. Like I mentioned, currently, we predominantly 95% of the EIAs come from the private life insurance companies, but very rapidly we are seeing health participation go up in this space. And we are expecting now general insurance companies and general insurance policyholders to also step into this category. IRDA's new mandate envisages that even group policies and all of that has to come and sit here. but I think we are still a little bit far, away from that, because a few things have to be still put together before that can happen. Uh, so to summarize, I hope I have been able to answer the questions in terms of how does it add value to the customer journey? How does onboarding become simpler with this? How does management of your insurance portfolio becomes easier? How it is actually a no cost facility available to the policyholder? All of these things is what this particular product is trying to address. And the way IRDA is envisioning is that this is the building block of how new use cases, new products are going to come up in the future. If you are able to make sure that the policy unit is digitized and it is sitting in a space where it becomes mobile and it's easily accessible, I think it opens up a completely different set of opportunities in future to be able to go ahead and create multiple kinds of services around it. Multiple kinds of new benefits can be actually created on that. I am not talking about the data which is going to get consolidated. There's a lot of those benefits which will flow in, but IRs do not go and share the data with anybody in any way and form. Only the policyholder gets access to the data, or the insurers get access to the data, to the amount, to the number of to the policyholders who they have actually got into the EIA in there. And we'll talk about it in the second part of the presentation, as we look at how does the insurers benefit from all of this. So now you will see my discussion will shift from an EIA discussion to IR discussion, because for the insurer, it is actually the insurance repository which is giving them the service, but for the policyholder, it's actually the account to which they use, and they get all the services from there. So the first is very clear. I've already said it's part of the insurer's onboarding journey, and it just obviates the need of a physical policy. Today we know that practically, I've been coming from the life insurance industry. I know that practically 50% of the policies today do not get printed. They actually get sent over emails. And I, as a customer, already know that every 3-4 years, once in a while, I need to look at my policy. I actually go and look and search either into my email, or I will call up somebody in the agent, or I will go and log up into the life insurance company's portal and try and download that particular thing. I think 50% of the insurance industry, I know at least life insurance industry, has already moved away from physical policies. The next step is just that instead of just sending it on an email, you could directly credit it on an EIA account, and then just it, and then you don't really have to bother about if a policyholder wants to download it 50 times. It's easy to do that, and it can be done there. The remaining 50% today, which is not actually using this, I think that is where a huge opportunity of cost efficiency is there. I know that today sending a policy, delivering a policy, getting a receipt, and tracking that entire thing is costing life insurance industry anywhere between 70 to 100 rupees. And a policy credited into a EIA account comes at less than 10 rupees cost. So you can actually understand the cost arbitrage, which is easily available for an insurance company. And many insurance companies are realizing this, more so in the life insurance world. And I think that is why the move towards coming into this particular platform is increasing. From an insurance company's perspective, you can look at it as a customer interaction point at a minimum, or you can look at a full powered customer service platform. IR, as all four of them have worked together with the IRDA and along with the insurance industry to actually define common data standards, on which we have been able to build common services now, which allows us to actually extract policy information from the insurance systems, premiums from the insurance system, servicing requests, policy status, all of those things we are actually able to access from the insurer system, and actually able to share that information with the policyholder. These are common standards which have been defined for retail insurance policies, both on the general insurance side as well as on the life insurance side. Even group standards have been defined. So far, we have not gone ahead and acted on group, because there are certain important information in the product level itself which is missing. So that's the next action which is happening. Once you have that information available, you will actually be able to get the group benefits also coming and sitting in there. Many of you here on this interaction platform would know, if you go and take a mortgage loan, most banks would try and give you a life insurance cover along with that. It's called the mortgage insurance or mortgage death cover, which you get in there. It's a decreasing term cover. All of us go and buy that or subscribe that in there. But I can almost bet on it that 99% of us would have never seen what does the certificate of insurance look like. Is there a paper that I receive on that which tells me that what is my coverage, how is it going to work in there? Many of us actually pay our home loans much earlier, but we don't even go back to the insurance company to claim back our surrender values because we don't even know that particular benefit exists in there. So if you just look at one particular use case on this, and if you can go ahead and get that information here for the EIA to see this is what is the benefit that he's getting along with his home loan, and if he were to go ahead and close his home loan, what is the benefit that he can get from his remaining value in the policy? That itself will be a huge benefit for that. And it actually solves the problem of the insurer, because the insurer has no way to get the COI across to the final policy holder through the bank in most cases, because the interaction itself is not happening in that manner. So just one use case of how common data standards, how building this entire ecosystem actually helps the entire insurance industry. The IRs are not asking for any investment. They are actually building this on their own cost, and they are only asking for a pay-per-use model. Most of the transactions on an IR platform range anywhere between a 15 to 35 rupee charge. Anytime a policyholder will use the system, the insurance company will pay for that particular transaction. This is how the system works today. On an average, I don't have the data for the entire IR industry, but on CAM's platform, we would process anywhere between 15 to 25,000 transactions, depending upon the month of the quarter. Quarter end months see a spike on the transactions, so we see anywhere around 22,000 transactions happening on our platform. In a lean month, you could have around 13,000 transactions happening on our platform. So a few other points which are a big benefit. So today what happens is, and this is the biggest use case for insurers to be on an IR platform, and digitizing the policies helps do that, is the moment the customer updates his or her record in one particular policy, it is actually we are actually able to replicate that information for all the policies the customer has, and we are able to send that information back to the insurer that this particular policy holder of yours has added or has updated his contact information. It could be mobile, email, it could be address, it could be bank account details, and all of this. And we see that insurers actually value this particular service the most, because they have seen, I'll give you one example. NRIs are actually the best case in here, because they are not able to update this information and not able to access this information anywhere else. But this is the easiest way for doing that. The maximum number of customer testimonials we get is coming from IR. And why I have put this against a DigiLocker is a one-way route where you can go and store your policies, but anything a DigiLocker user does on the DigiLocker does not flow back to the insurance company, which is why insurance companies are forced to give the data there, but they're not getting any benefit out of it. So EIA and KYC, I already articulated the use case here. Very simple one, which is if you have a EIA account, you don't really have to do a KYC. You can use your EIA and you go ahead and be able to buy and purchase a new insurance policy without actually having to repeat your EIA, without having to actually repeat your KYC in there. This is a service which is getting evolved, and it's at a stage where we are expanding it. And I think in IRDA's new thought process, if this comes into fruition, I think it will be a one big major reform of making sure that how customer journey gets simplified in there. That's something which all the IRs along with the insurers are working on it. We are also working on portability, assignment, like I said, digital assignment, unclaimed benefit clearances, claims processing. All of these are industry level problems which one insurer cannot attempt to solve, because they are inter-insurance company problems in there. And we are trying to build solutions around it which help the insurance industry actually look at increasing the benefits, increasing penetration, reducing their cost on this. At the moment, as we see, 1.3 crore policies in IRs, growing by about 4-5 lakh policies a month. as I said, the primary policy credit happens from the life insurance industry. There are at least more than three life insurance companies which have 100% moved to digital policies through EIA. And there are more and more life insurance companies joining that form. We have now seen health insurance companies come into the foray already, and we are now hoping with KYC coming in, the non-life people will also walk in there. So this is the two segments which I wanted to cover very quickly, and I want to leave you guys with one thought, which is here: how can insurtechs participate? So within this IR system, there is a unique system called authorized person. Any insurtech, or rather, I would say, any intermediary who's involved between the customer and the insurer, with a certain set of checks and balances, can go and register themselves and get a license of being an authorized person with IRDA. It's a very simple process. It doesn't take too much time to go ahead and do this. Even an individual, a corporate, or any of those can actually go ahead and get an AP license. Once you get an AP license, you can actually help your customers open an EIA, and as many customers open the EIA through you, that information will be actually visible and accessible to you, from there on ongoingly. Many brokers actually use this facility today. I have highlighted some of the names here. They help their customers open the EIA, and it actually helps them manage their customer relationship subsequently from that. There is no charge for the APs to actually go ahead and do this. We actually encourage this because it helps us in getting more and more people onto the digital platform in the insurance ecosystem. So any insurtech which is there right now, I talk to Insurance Deco, Turtlemint, all of those guys. In fact, Turtlemint is already an AP, Policy Bazaar, Maruti Insurance, Bajaj Capital. All of these guys are already APs, and they've embedded the EIA into their customer onboarding journey. And there are more use cases coming through right now on this, where they are starting to use this information for their set of customer on helping them go ahead and manage their insurance benefits from there. So I think this is one way of participating in this. I am sure there are more which are going to come our way. But I thought this is something which I should highlight. And we from CAMSREP are always interacting. The reason we are part of the InsurTech Association is we believe that more use cases will come through. As new models come through, we will be able to participate in this. That's what I had to share. I'm going to stop here, and happy to take questions, happy to get the discussion going. I'm just going to go back, stop sharing my slides, and be back in there. Sorry. I have a
Vivek,
question.
could you please switch on your video also? I will just put the question up on the screen one by one.
Perfect. Am I my is my is the customer with zero existing policies can open an EIA account? Will they have to do KYC while buying their first policy? Is the question that I'm looking. I think Aditi Mahajan has asked the question. Turtlemint. Uh, Aditi, I can, yes, you can go ahead and open a EIA account, and yes, you can code the EIA account, and you can go ahead with the first purchase of your policy without actually to do the KYC. Yes, that's a facility which is already available. Essentially, EIA is replacing KYC. No, we are not replacing KYC, but we are actually doing the KYC. And when the insurance company actually uses that, we will be actually able to share with them that this is the KYC that we have done. So it's allowing us to make sure that your KYC is done only once, and you can use that and reuse that across the insurance ecosystem wherever you want to do that. How will insurance company be updated if there are any changes done in EIA? I hope I answered that question, because we have a system of integration already at the back, where we are actually able to, through send and exchange information with them. We are able to access, because common data formats have been agreed, so we are actually able to go ahead and access that information, also share the updates back to them in here. This is something. I see a question from Shubham. Can you explain the price arbitrage again? I'll come to that, but that's the only question that I'm seeing on the Q&A tab. Rest of the questions that I'm picking up right now, I'm all picking up the question, from the chat box itself. I hope I'm doing the right thing, here. Shubha, if there is something which I'm missing, just let me know. Yeah. Are services under basic and premium listed? I'm not sure what does that mean, but yes, the IR regulation actually call out what are the basic services, and anything other than those basic services is categorized as premium services. You can actually look at it up. There's a 2015 guideline which is there. It actually calls out for all the basic services. So premium payment, surrender claims, all of these kind of things actually come under basic services. In there. So they are called out. The basic services are called out, and you can see the list in there. Yes, I think Sahani Singh is asking a question. Any startup developing solutions on top? I think there are many. I have a few friends here who are doing it. We have already started active discussions with them in seeing how we can actually get them onto the IR platform, where the EIA customers can use their services. I cannot share the data of that, but I can actually expose the products that you have onto that in there. And if the customer chooses to use that particular product, yes, it can go ahead and then they have a choice of going ahead and doing that in their respective product. That is possible. Please revisit the KYC. EIA comes with completed KYC. What does it mean? Okay, I will just try and explain you. This is the evolving situation right now, but what does the current status mean at this point in time? Let me try and give you a very quick summary. Let's say you have gone to an insurance company to buy an insurance policy. They will do the KYC, and then in that process, you have asked to open an EIA. They will actually inform us that this customer, we are onboarding this customer in our insurance product. This customer doesn't have an EIA. Can you please open an EIA here? We open an EIA, and then the two things will happen. First of all, you as a customer will get to know your EIA number, and the second is that policy that you have bought will actually come and sit in our EIA account, in your EIA account. So that's the two-step process. Now, because at the time of onboarding, the insurance company has gone ahead and done the KYC for you, you can actually rely on that KYC for the next purchase through the EIA account. That's the process that we are following today. There is one gap which is there. Not all insurance companies are sharing the KYC details with us. They don't share the images with us. Some of them do, some of them don't. And that is why if the insurance companies in a case of audit or in some subsequent cases, if they want to ask us for a KYC documents, in that case, we have to go back to the previous insurance company, ask for it and give it in there. That's how we facilitate this today. But all the customers which come and open this EIA account directly with us, we always have the KYC with us, so we are able to actually share that with the insurance company when we do that. And that is what helps in making sure that you don't have to actually repeat your KYC in there. I hope that gives you some sense of what is happening in there. This is a service which is growing right now because IRDA is now trying to upgrade this whole thing. If KYC becomes mandatory, it has become mandatory, sorry, for even GI insurance companies. And I think if that data starts flowing into IR, I think that will be very useful because the EI platform is a huge, the GI platform is a huge platform. There are almost 20-25 crore, policies which get, purchased every year. And I think that's why that will add a lot of value in there. Open APIs for our IT application to create, not a question I can answer, but I'm sure you will very soon see this particular thing coming up, not through the IR platform, but IRDA is already working on creating something like this. So it should be applicable, and we will actually be one of the users of that particular thing. So we will be actually able to contribute in creating them, and then everybody of us can use it. Today, the common data standards which are available, they are controlled or they are operated by ITREX, which is an IIB utility. So we access everything, all data standards, everything get run through them. So it's not a common API which we can share across. We are dependent, or we are actually supported by IIB to do that. But IRD is already working on making sure that this becomes actually a common utility in there. Yes, there is an easy platform, Murlidhar. If you want to actually get more information, happy to share information on how to become an AP. It's something which is can be easily done. We can help you facilitate that also in there. Can a broker use this, Aditi? Just a side remark, Turtlemint. I and Dhiren have been talking about it, and we've done a lot of discussion already because we've got Turtlemint on the AP platform. Happy to answer the questions in there. Can the EIA be opened through the broker in there? Yes, it can be, but it will still be on my platform. It will not be on your platform. In there. What are the services that the insurer pays to the IRs? Insurer pays to the IR today on all the basic services that are available, that are listed. How will insurers receive service requests from the IRs? Because customers come onto our platform and they give us service requests. We actually pass that on back to the insurers. We are connected with them. So, for example, if you were to go ahead and say that I would want to I want to change my address, or if you want to go ahead and request a surrender value, or if you want to go ahead and we are right now not being able to do the fund related transactions. Those data standards have just got ready, and we are just building that service. So we haven't, but all of those things we can easily, even submission of claims is something which can be done on the IR platform, and we will be able to take that request back to the insurer in there. CAMS particularly, not all IRs, but CAMS insurance repository is accessible through a mobile app. It is accessible through 300 insurance service centers. So anybody who is an EIA can walk into these 300 service centers and actually request for policy servicing in there. So we have that available. Vijay is asking about dematerialization as a responsibility of insurance company or the policy issuing broker through the ISNP platform. Today, the responsibility, or I would say the guideline, says that you have to do this if you are using the digital platform, the ISNP platform, then it is compulsory digitization of policy, and that is a guideline, or that is putting the responsibility on the insurance company. So that is where we get compulsory, policies flowing into our platform. I think Prayesh has a question from Motilal Oswal. LIC wants to open up its own repository. How will that play out for the IRs? We welcome that. We are actually, it actually really, I wish that LIC understands that they're late in the game. They are validating the use of this particular thing, because it is not really IR as a game. It's for policyholders. The policyholders will choose where they want to go ahead and do that. Regulations today may not allow LIC to open it, because regulation is very strict about it. For any IR, which is today all the 4 IRs which are operating, they cannot have they cannot go into the distribution of insurance business at all. That's a restriction that is there, which is why if you look at us, we will never get into selling of policies as a business in there. LIC being the largest life insurance company in the country, they will have this as a challenge when they go out and do this. Number one. Number two, other insurance companies have their own reservation by doing this in sharing their data of policyholder on this platform, because of the same reason that there is a restriction of not having any insurance manufacturer or insurance distributor coming into the game of data and repository and data security custodian business in there. IRDA in their regulation have actually thought about it. This is a conflict of interest and they have not allowed it. But if you ask me personally, I really see this as a validation that yes, there is huge value in having repositories, and I'm glad that LIC wants to come and do this, but they may not be permitted to do that in there. I see lots of queries on AP registration. I see one question which is coming from Anirman Priyanka. Priyanka, right now we are doing this largely for retail policies, but yes, very quickly you will see that we are actually already having what we call as a corporate EIA account. We've already started with that particular thing. When I say we, I'm saying CAMS rep as well as a few other IRs have already started with this. So you will see very soon, group policies also coming onto this platform in there. Embedded insurance policies, I think that's something which we would want to work. Simbo has actually worked with us before. So Sonnet, we are very keen. This is a use case of interest to us. We would like to see how we can actually get embedded policies also onto the IR platform. Currently, if you ask me, are we doing this right now? No, we are not doing this right now, but we are keenly exploring this, how we can embed our journey into the embedded insurance journey, because it really has to be absolutely seamless, and there should not be any delay in this entire experience of the customer. Yes, I see Jayan Matthews, co-founder of Vital. I think he's talking about saying, is there a synergy between EIA and KYC? How can that become, if KYC is mandated, how will it become, how will it be viable for low-cost premium products in there? Like we said, EIA is a free of cost service. It's not something which is being charged across. But I agree with you, Jayan, that KYC for GI companies and the mandatory EIA actually have a huge synergy. We think that both of these things can go together, and IRDA should allow this thing to happen. If they do allow this thing to happen, I think there is interoperability. There are huge benefits in there. But this is a discussion which is happening at the regulators level right now. And yes, it actually helps in reducing the cost of the whole thing. So because we understand that this entire KYC thing have to be done at a very, very cost-effective manner. This is something also which is, you can draw examples from other industries. I look at SEBI and the mutual fund industry, the capital markets industry. I think they have done a fabulous job of creating KRAs and interoperability there. CAMS obviously is one of the KRAs, so we understand that system quite well. We regulator actually, our IRDA has also taken note of it, and they are also seeing how do we create this common system in there. Right now, the process of it is actually under discussion. I think from what my understanding is and interaction, I believe they are principally okay with it, but it is just going to take time. It's just going to take time before we can actually see a process or a regulation on it, and how that will shape, in there. Yes, anybody who's opening a EIA, there is an explicit consent from the customer required to open the EIA, account. This happens while you are purchasing a policy through an insurance company also. In there, Prashant has a question. He's asking about portability within IRs. Yes, while you cannot have multiple EIA account, but you have all the freedom to port from one IR to the other IR. Currently, this system is, I would say, it's not a smooth system, but you will very soon see this system becoming absolutely click of a button system, because this is something which is one of the things which all 4 IRs are working on, to make sure that that particular service is smooth. If you don't like a service quality of a particular IR, you should be immediately able to switch, and all your policies will go ahead and sit into the new account. So we are working on it. We should be able to we should be able to do that in there. Tushar from Edelweiss Tokyo is asking a question: is there any restriction on policy kit upload at the time of conversion? We do not really mandate, but we do have a prescription to make sure that it is coming in a particular size, but there is no mandate on the size of it. We're just trying to make sure that it is optimized, because when we have to save crores and crores of policies, this data becomes very heavy. The policy set is very well defined, what all are the documents which have to come. But size, no, there is no restriction on size, or there is no definition of size as we talk about it. But yes, we've got to optimize it, to make sure that it is efficient for everyone. Whose responsibility it is? Tech lead from Probus Insurance Broking. Whose responsibility it is to create the EIA? The moment the EIA is created, IRs reach out to the customers, to the EIA holders. We give them an information on what their EIA account is, how they can operate it, what are the things that they can do about it. It is done through email and SMSs in there. We now at CAMS Rep, we are equipped by communicating on WhatsApp also. We on a daily basis, I think we receive anywhere between 50 to 120, depending on the day of the week. We receive anywhere between 50 to 120 phone calls from customers asking us about different queries on how they use their EIA account in there. But yes, we do have to inform, and we do get into touch with the customers. I think Mangesh Vaitala is asking about, can we integrate directly with CAMS and leverage eKYC repository services? You can interact with us, but I do not know what do you mean by leveraging the eKYC and common APIs. Like I said, common APIs don't exist with us; they exist with IRDA in there. And it's not really common APIs. It's actually one single service which is servicing all of that. So I think if you are looking at using those things, I think it'll be useful to connect with the IIB and that set. But on this side, we can definitely look at how we can help you, in terms of customer onboarding journey in there. Uh, Presh has a question about basic services between 15 to 35 rupees per request. Depending, yes, I think depending upon the volume, depending upon the kind of services being offered, the range is anywhere between 15 to 35 rupees. If it's a simple update, it could cost you 15. If it's a premium payment service, renewable premium payment service, it could go up to 35 rupees. Some other services could even be slightly more on that, but that's kind of the general range in there. Who are the four IRs? The four IRs: CAMS repository is one which you are talking to right now, NSTL, CDSL, and Carvi. These are the four IRs at the moment active. There used to be five, but now there are four. InsurTech companies build, yes, Sarvana Kumar, yes, you can build solutions on top of it. Happy to talk to you on that. Can customers search through policy numbers to find out in which IR they have an EIA? Can customers search that? You're saying, can a policy holder search that? I don't know if that is a service which is available at the moment, but I think this is something which can be easily done. I don't think we have that available at the moment, where some customer can come and search that particular through a policy number. I don't think that is a service available today. What happens to the legacy old discontinued policy? Will they remain offline? And Mayan Kansal is asking that question. IRDA's proposed guideline says everything has to move to digital platform, digital system. So you have to digitize them, but we don't have right now a timeline on it on how this is going to happen. But any policy which has got a value, or any policy which has got a revival period, any policy which has got a benefit in there, they should all move to the IR platform in one place. So that's the way IRDA is looking at it. But we will only understand once the final outcome is available, out, or rather guideline is coming out. I think, man, I answered price arbitrage. Okay. I think the question was, is there a price arbitrage between an insurance company building its own customer services platform and the ability to use an IR platform in there? All of us are from insurance industry. We understand that our interaction with the insurance policy is quite limited. If you look at it, in a year you would end up interacting. If it's a life insurance policy, then you will probably interact with it on a renewal to renewal basis, or if it's a general insurance company, largely the interaction will happen when there is a need of a claim in there. So if you look at it from an individual insurance company's perspective, they are not seeing as much interaction happen on their platform. If they are each individually, almost all insurance companies would have built some kind of an interaction platform, either through their website. Not many are building an app, but either through a website or through their branches, or in whichever way. My insurance experience tells me that any insurance company, life insurance company, interacts with 3 to 5% of their policy base in one full year. So if you are sitting with a 15 lakh policy base, you are looking at you are looking at anywhere between 3 to 5% coming in there on an interaction basis. Now, any insurance company which is not going to have a base, let's say IRs are going to have a crore policy base, and I think you are looking at the transaction base numbers. I think the economics are not going to be as I would say feasible in there, and that's why I think this is an opportunity to consolidate and do that. Guys, I am conscious of time because it's already 4:15. Shobha, I want to go back to you. There are more questions which I can take. If it is okay, I can answer them to you on an email, and you can respond back. Is that fine? Shobha, I can. That works. Then I'm looking at Sumit and Shobha to go back. I am seeing one more question here from Akhil. He's saying, can EIA make policy cancellation easier? I don't think we want to make policy cancellation easier, or rather, difficult or easier for anyone. But yes, IRs can support in managing that entire process, both in retention and in actually helping. If it's a policyholder's requirement, then yes, we can facilitate that also in there.
Vivek, if possible, we can also extend the event by 5 minutes, and you can, if you could, quickly answer, the remaining questions if possible. Otherwise, we can take over email also.
Sandeep, good friend of mine from Edelweiss, is asking me a question. Is there a need customers to send by insurer to customer in case of a successful credit policy credit in IR account? Further communication will happen through IR on renewal servicing. So very quickly, Sandeep, thanks for asking this question. IRDA has quite clearly laid out the guidelines in terms of how our IR is supposed to communicate with the EIA. So there are some information which is necessary to go out in a year. So for example, at least once in a year, we will reach out to the EIA at the time. So let's go step by step. At the moment you open a EIA account, there are a certain set of communication which have to go. Point number one. Point number two, there is a welcome, kit, or rather welcome email which has to go, which allows the EIA to understand how he or she can use the EIA account. So that is something which is done once, and the insurance company actually is able to print the EIA number on the policy document itself, because it's part of that. So you can actually go ahead and print the number in there. I think most insurance companies are informing their policyholders that they have got an EIA account. Most insurance companies are doing that, either when they are opening a new one or if they are finding an existing one. So I think that's something which is happening there. Subsequently, once the onboarding has happened on a EIA account, we have 3 or 4 things which happen in a year. One, like I said, at least once in a year, we will reach out to the policyholder in making sure that the contact details are up to date, whether it's email, address, mobile, bank account, all of those things are up to date. So that's something which is done. There's a second thing which is done very quickly, is to make sure that he at least receives one annual consolidated account. That comes generally in the beginning of the financial year, so April, May. And the third thing which will happen is they will go ahead and receive all renewal premium notices from the IR, whichever IR it is. They will receive that information so that they can actually go ahead and renew their policies. Many insurance companies have integrated with IRs to enable renewal premium payment also. But it is not necessary. The policyholder can go to the insurance company's platform and or their website or the bank and make the payment from there. So those are the ones which are mandatory communications that we do. Thank you. I think I had a lot of questions. I may have missed out on a few, but Shobha, Sumit, you guys let me know, and happy to answer questions, or continue with this, because I think today it was more me trying to explain what we do today. I'm more keen to understand how this entire InsurTech community is looking at building things on top. I think, I don't know whether my team member Ram has joined here today in the conversation, but he leads our digital services piece. So we continue to interact with many. Sumit is somebody whom we are understanding how we can actually build more services on it. So happy to have a conversation offline on that in there. Thank you, Shobha. I'm going to give it back to you. Thank you. Thanks, done.